Today we're talking about Reddit stock, and the move in this name has been pretty dramatic. Reddit was the IPO darling of 2024, and at one point the stock skyrocketed to around $282 per share. But look at the ticker today. It's trading around $132, roughly a 53% drop from its 52-week high. So the big question investors are asking right now is this: is Reddit a falling knife, or is the market overlooking a major growth story? Because here's the interesting part. While the stock has been falling, the company's revenue surged 69% year over year. That's a huge growth number for a company of this size. So is this the ultimate buy the dip opportunity, or is the front page of the internet losing its appeal on Wall Street? Let's break it down. First, let's talk about what's been happening with the stock recently. If you zoom out and look at the bigger trend, Reddit shares have dropped about 42.7% since the start of 2026. That's a pretty big pullback in just a few months. Normally, when a stock drops this much, the business is struggling. But in Reddit's case, the fundamentals actually look strong, especially that 69% quarterly revenue growth. So why is the stock falling? One reason is valuation compression. Over the past year, the market has shifted away from high multiple growth stocks. Investors have become more sensitive to valuations, especially in a higher interest rate environment. At its peak around $282, Reddit's price-to-sales ratio was extremely stretched. Even after this drop, the stock still trades at a price-to-sales ratio of about 12. That's still a premium compared with many companies in the broader tech sector. Another factor is profitability timing. Investors love growth, but eventually they want consistent earnings. So the market is balancing two things: very strong top-line growth and how quickly Reddit can convert that growth into reliable profits. Now let's step back and talk about what Reddit actually does as a business, because a lot of people still think of it as just a message board. In reality, it's becoming something much bigger. Reddit is essentially a massive human conversation platform with over 90 million daily active users. And those conversations create extremely valuable data. The first major revenue stream is advertising. Unlike many social platforms, Reddit ads often target user intent. When people search for product advice, investment ideas, or tech discussions, advertisers can place highly targeted ads inside those communities. The second major opportunity is data licensing. Reddit has started licensing its archive of human conversations to artificial intelligence companies like Google and OpenAI. These AI models need real human dialogue to train their systems, and Reddit has decades of it. That's part of the reason we're seeing such strong revenue growth right now. Reddit is finally monetizing a user base that for years was relatively undermonetized. This brings us to why investors were so bullish on the stock in the first place. The bull case for Reddit is based on the idea that the company is just beginning to unlock its business model. That 69% revenue growth shows the ad platform is scaling quickly. Advertisers are recognizing the value of these highly engaged communities. When you look at valuation metrics, things actually look more reasonable after the recent drop. Reddit's forward price-to-earnings ratio is around 32. For a company growing this quickly, that multiple isn't outrageous. But the metric many growth investors focus on is the PEG ratio. Reddit's PEG ratio is about 1.06. For those unfamiliar, the PEG ratio compares a company's valuation to its expected earnings growth. In growth investing, a PEG close to 1 often suggests the stock is fairly valued relative to its growth potential. That's one of the strongest arguments from the bulls, that the recent sell-off may have pushed the stock below its fair value. Of course, there's also a bear case, and it's important to understand it. Even after the drop, a price-to-sales ratio of 12 is still expensive in today's market. Many mature tech companies trade closer to 5 or 6 times sales. So Reddit is still priced like a company that needs to keep executing well. Another concern is sustainability. Can Reddit maintain growth anywhere close to 69%? Some skeptics believe that once the initial AI data licensing deals are signed, that revenue stream could level off. And finally, there's market sentiment. Reddit is still viewed as a high beta stock. When the broader market becomes nervous, investors often sell stocks like this first to lock in profits. Now, let's look at what Wall Street analysts are saying. Interestingly, analysts haven't given up on the stock. The average analyst price target for Reddit is about $228. That suggests more than 70% upside from current levels. Bullish analysts again point to that PEG ratio near 1.06, arguing the market is undervaluing Reddit's growth trajectory. More cautious analysts focus on the price-to-sales ratio of 12. Their view is that the stock may need to fall further before it becomes a clear value opportunity, possibly closer to 8 or 9 times sales. So the big question is Reddit a buy after this big drop? Here's how I personally look at it. The bull case is straightforward. If Reddit can maintain strong growth, even if it slows somewhat from 69%, the current valuation could look attractive in hindsight. That forward PE around 32 could shrink naturally as earnings grow. The neutral case is that the stock stays volatile around current levels while the price-to-sales multiple gradually declines and revenue continues catching up. And then there's the bear case. If growth slows significantly, for example, from 69% down to around 30%, that 12 times sales valuation could start looking expensive, and the stock could revisit its previous lows around $80. Personally, I think this pullback is creating an interesting entry point for long-term investors. I'm not saying go all in right now, but starting a small position could make sense. My approach would be to build a position gradually. Start small around current levels, and if the stock drops further, add more over time. That way you're averaging into the position instead of trying to perfectly time the bottom. To me, Reddit is no longer just a meme stock. With strong user engagement, new AI data licensing opportunities, and revenue growing nearly 70%, it's becoming a serious growth company. At the same time, with a price-to-sales ratio around 12, it's still very much a show-me story. Investors will be watching closely to see whether that growth momentum continues, especially in the upcoming earnings report on April 30th. So in my view, Reddit is a high-potential but high-volatility stock. It could deliver strong upside if execution continues, but investors should be prepared for big swings along the way. Thank you so much for watching. If you found this breakdown helpful, please consider liking the video and subscribing to the channel. I really appreciate your support, and I'll see you in the next video.